Stockbit is a place where you can learn, you can discuss, you can get information about stocks in Malaysia, right? It's also a place where you can analyze. It is actually originated from Indonesia, but I think now we are trying to really move the best features of Stockbit from Indonesia to Malaysia. Things such as stock screeners and the ability to open an account or even trade from Stockbit will soon be there. So it's a good place to mingle and get a healthy discussion from Bursa and KLSC actually. How we are different is that we feel like the new millennials, the new generation of traders, they are all in social media. So Stockbit, it caters to the social media technology, right? So you can follow people, you can block people, you can report an abuse, and there is always a profile to have each user. So you know which user you can follow, which user are credible, and a lot of the controls are at the user's hand. Yeah, you can check it out.
Hello and good evening, everybody. Welcome to another live session. And today, I'm so excited to have INNO, which is a company that we have covered quite a bit in Stockbit, as well as I'm also very excited, to be alongside my idol, Rondi, over here. So I'm kind of fanboying right now. All right. So yes, once again, welcome everybody. And for those who are new, let me just give a brief introduction about Stockbit. So Stockbit is an investment community and platform where everybody, regardless of whether you are just a beginner or whether you are a professional, everybody can come together to discuss and analyze and share about companies together, right? We can share about the ideas, or talk about the macro factors or micro factors, and yeah, if you do use the platform, if you are a member of Stockbit, be sure to follow all the verified users. There's a lot of great content posted by them. Other than all the articles that are user-generated content, we also have all the latest news, the research reports by various banks will also be posted there. And we have great features on the platform, such as the watch list, the seasonality chart, and a few other features that you should definitely check it out. So without any further ado, I would like to welcome the management.
I'm just wondering whether everybody can hear us okay. Terence, can you hear me okay?
Yeah, Rondi, loud and clear. Am I okay?
Yeah, you're good to go.
Okay, great sound check. So
Terence, you used to work in the plantation sector also, right? Like as an engineer or something.
Actually, yes, I was formerly one of the contractors for a plantation. Mainly, we worked in Indonesia back then. So
Okay.
yeah, I did a lot of planning on the water management of the estates.
Nice. So this would be a very, very good session for you.
I hope so. It's been a long time since then, and yeah, I'm excited to sort of touch back, all the old information that I used to have.
So yeah, I think this session will be very interesting as well. I think today I saw the March CPO price went even higher, right, to like 7,004 and all that.
Yeah, unheard
So
of.
of course, yeah. So of course, like that would be good for all the plantation counters, which had actually been going up in interest and in the share price, and it's also reflected in their fundamentals, right? Because the past week, we have seen various Q4 earnings from various plantation counters, and they all have actually proved that their fundamentals are also in line, lah. So, and that is quarter 4, right? And it's not even taking into account the current CPO prices. So it will be a very interesting session, I suppose. And yeah, let's guys, if you have any questions, please just put them all in the chat box. We will try and address them one by one. And yeah, Terence, let's bring up the speakers.
All right. So we have Mr. Asgari and Mr. Lim, who are the directors of InnoPrice and TSH Resources, respectively, to join us tonight to share a bit about the company, and we talk about the CPO and plantation industry as a whole later on also.
And I think we also have Freddie. Freddie
right.
is from M Invest. He is the advisor of InnoPrice. Yes, I think Freddie, you'll be the one presenting the slides, right?
Hey, yep, that's right.
Yeah. Okay. Shall we do one round of introduction before we go on the presentation slide? Maybe Mr. Asgari, you want to say hello first or something?
Hi, good evening. I hope you guys can hear me. Yep.
Yep,
Yeah.
loud
I'm a
and clear.
director of Enterprise Plantations.
I see. And Mr. Lim?
Hi, Lim Fukin here. I used to be the executive director of InnoPrice, but I think I resigned 2019. But I remain as a director of TSH Resources, but I'm a non-executive, non-independent.
Okay.
Thank you.
Thank
Hi,
you. Okay.
Freddie, I'm from M Investment. I'm actually just a friendly party to Mr. Lim and Askari here. So,
All right. Yeah, Freddie, I think the floor is all yours.
Let us,
Okay. Good evening, everybody. Thank you, Rondi, Terence, and everybody for your time. Maybe I'll just start with the presentation. If you can just move to the next slide. Yep. Maybe you want to. Terence, you want to full screen the presentation slide?
Hold on. I think there is some glitch.
No problem.
I don't know why it's not really moving. Yeah. If I do full screen, somehow it's not reflected. I'm not sure why. Freddie, do you think we can just present like this?
Yeah, sure. You
I'm trying to do a full screen, but it doesn't work.
Rondi, how about pressing share and then clicking slides and then uploading the slides to StreamYard?
I think it's not working. Let's go first. Freddie. Sorry about this, guys.
okay? Can okay? I'll just proceed. So basically, Enterprise Plantations Berhad is in the cultivation of oil palm producing CPO and palm kernel. They have 6 estates and 1 mill, all located in Tawau, Sabah, and they are all joining together, therefore allowing them to actually save transportation costs and be cost efficient. Land size wise, they have about 22.7 thousand hectares, with 12.6 thousand hectares being planted and plantable. So the land is currently owned by the Sabah state government, but Enterprise has the rights to use it for the next 40 plus years up to 2066. So with that, Enterprise will actually have to pay a certain percentage of value of the FFB production to the forestry department. So just on the left-hand side of things, you can see the FY 2021 operational matrix, which I wouldn't dive into it too much. Can we go to the next slide? Okay, this slide just shows the company structure. It's a Sharia compliant stock and has a market cap of about 980 million at this current price. It is 50% owned by the Sabah state government. One thing to point out is that TSH Resources Berhad has about 22% in Enterprise, and that the management of the estates and its mill is actually being outsourced to TSH. Next slide. Thanks, Randy. So touching a little bit on its historical background, it started off as a timber company in the 1970s, and in 2006, TSH emerged as a substantial shareholder and changed the business earlier from timber related to the cultivation of oil palm. By 2012, they constructed their oil palm mill, and they have recently obtained their MSPO certification and have changed their dividend policy to a minimum of 80% of their PBT. Next slide.
Terence,
In one moment, let me present the slides. Okay. Is this better? Yeah.
Yes.
Yep, this is much
Okay.
better. Okay, maybe we can go to 2 slides after this. Yep. The next one is just the management. I wouldn't dive into it too much. Okay. So this slide basically shows the synergistic relationship between Sabah state government and TSH. So as mentioned earlier, the management of Price's estate are actually being outsourced to TSH. So with that, Price are actually able to tap into their expertise, such as their agronomic and agricultural practices, even the usage of their Wakuba clonal oil pumps, which has a proven higher FFB and oil yield. So therefore, with that, you can see the benefits. INNO's operational metrics are actually above the industry averages. Their production cost X mill is efficient and is estimated to improve to around 1,005 ton per ton in FY 2023 as the FFB yields continue to improve and the normalization of the cost and the windfall tax. Also, is able to tap into their connection, whereby all of their CPO and palm kernel is actually sold mainly to the TSH and Wilmar's refinery, therefore providing sustainable income for the group. As for the Sabah state government side, INNO would be able to obtain approval easily, showcased by their extension for the rights to use the land for oil palm cultivation up to 2066. Also, with the state government having the largest stake, dividend would be a main priority for now, as Yayasan Sabah's main role is to be the main generator of funds for the state. So just FYI, in 2021, declared a dividend payout of around 121% of the profit after tax. Next slide. Okay, this slide basically just shows that INNO is currently at a cash cow level, and this is underpinned by 2 main points. First point, majority of its age profile are young. About more than 90% consists of young and prime young, meaning from 4 to 15 years of age, with an average age of around 9.8 years. And the composition of just prime young, which is 11 to 15 years, is expected to increase up to around 70% by 2024. Therefore, moving forward, the FFB production and yield will only continue to grow and improve for many years to come. The second pointer is that there's Price actually requires minimal capex. Their estates are actually fully replanted, and the supporting facilities like staff quarters and amenities are already all built. So there won't be any replanting capex easily for the next 10 years, but to just yield. Next slide. So with that being said, we forecast an FFB production to grow to more than 10% this year and a conservative 5% in the subsequent years. As for this year, the big jump is mainly because of a better rainfall throughout the 2021, and obviously the improvement in labor shortages as the border reopens soon. And as for the subsequent years, it will be mainly underpinned by more trees becoming prime young, therefore providing higher matured areas and also the higher FFB yield. The next few slides are the financial statements. So you can see FY 2021, the earnings and margins were underpinned by the strong average selling price. Borrowing wise, they are currently in a net cash position. And if you can go to the next slide, in terms of their balance sheet, you can see INNO Price recently declared a minimum payout of 80% of its earnings in FY 2020. And since then, in FY 2020, they have actually paid out 84%. And in FY 2021, they paid out around 121%. So this is actually spurred by their strong operational cash flow, strong free cash flow, and also minimal capex requirement. So all in all, before I hand it over back to the management, just to recap, the synergistic relationship between TSH and Sabah state government allows INNO Price to benefit and tap on both sides. They have a young age profile with an average age of around 9.8 years, and 90%, more than 90% of the age profile consists of young and young prime. Therefore, will be providing decent FFB production growth moving forward. Financially, they are strong EBITDA, PAT margins. Balance sheet wise, they are net cash and have a very strong cash flow operations. Just to share, in their FY 2021, its operating cash flow is more than 100 million. It's a strong dividend play with a young age profile. That means it is timely just to reap the benefits with no replanting capex for the next 10 years. Obviously, a good proxy to the CPO trend as they are a pure upstream. And last but not least, at this current level, and if CPO prices were to maintain, it is actually trading at a attractive valuation of a blended single forward PE and also a blended dividend yield of easily more than 10%. So that's all from me. Thanks, Rondi and Terence.
Okay, thank you so much, Freddie, for the presentation. Yes, so
Yeah, there are quite a lot of questions coming in already.
yeah, I'm just looking at the chat box.
Yeah. So I think, Freddie, we'll put you in the background first, and we'll proceed with the Q&A with Mr. Lim and Mr. Asghari.
Hello, welcome back, Mr. Asghari and Mr. Lim, to the live session.
Thank you.
So maybe I'll have the privilege to ask the first question first, Terence.
All right, go ahead, Randy.
Okay. I think there is really no other place to start the session without talking about the CPO price. Yeah, Mr. Asghari, Mr. Lim. I suppose a lot of people are also asking, right? Like, how do you see the current CPO price? I think today, the March, it was trading above 7,400 ringgit, which is an all-time high. And I recall, this time last year, it was also very high, about 4,000 plus, and it was due to, perhaps it could be due to the soybean price being high, hence pushing up the CPO price as well. Right now, of course, one of the reasons could be the Ukraine and Russia conflicts. But maybe just would like to really hear it from the expert, why is the CPO price so high, and where do you see it? What's the outlook of the FCPO maybe this year as a whole?
I'll let Fukin handle that one. You can go, Fukin. You're the one with deep industry expertise.
First of all, I don't have a crystal ball, so I don't know where prices will be going. I think, as you can see from the market structure for in fact, for the past maybe 1.5 years or so, the principally the price has been going up because of the nearby squeeze, So you look at the backwardation structure, right? It's so high, something that we have not seen before also, right? of course, the price is price wise, right? The spot price of about 7,500 is never in my lifetime, right? The lowest price I have seen, right, that was about 40 years ago, was 460. So I think CPO historically you can see that it's very sensitive to the stock usage ratio. Right. At the moment, I think stock usage ratio is historic high, low. Right. So that means current stock level is very, very low. Right. And they consumers still buying, edible oil, right? You have the drought situation in Brazil and Argentina, right? And now certain part of Brazil is also too much rain is also hampering their production, the current harvesting situation, right? And of course, the conflict in Ukraine, between Ukraine and Russia, right? Ukraine is a major supplier of sunflower oil. So with the current conflict, I think logistically supply of oil will be hampered, right? And depending on how long the war is going to drag on, right, the next planting will also be affected.
Could you elaborate a little bit about what you mean by the next planting will also be affected?
Because if the conflict is continue, right, the war is continuing, right, there will be a lot of they'll be in a war situation, so there will be less planting of sunflower seed, sunflower.
So by the reduction of sunflower supply, sunflower oil supply,
Yes,
this will also
that would affect global supply of the edible oil.
And this would be a boost to CPO as well.
Oh, I really cannot say that whether the current level, how long can it sustain? I don't think I can dare to venture a guess.
Yeah. Now at the 7,000 plus, as you mentioned, never seen before kind of levels.
Yeah.
I think sunflower oil is about 15 million tons a year out of 150 million. Out of 150 million, so it's about 10%. And I think Russia and Ukraine's about 6 or 7%. 60 to 70% of that. So like overnight, you've taken out maybe 10%, 10 million, 6% out of global demand.
Yeah.
Overnight.
That's a huge chunk.
It's a big chunk.
Yeah, that's a huge chunk.
As I say,
to give you some context.
Yeah, it's the usage, the stock and usage balance, is very important.
Would you say that it's very difficult for, say, planters now to, push their production to increase production of CPO to match the current demand?
You very much, you see, your CPO crop, right, is very much determined by what happened 18 to 20 months before you harvest, right? That is when the palm would have the sex differentiation stage, right? As you know, the oil palm is like in a way is like a hermaphrodite. It's both male and female. So they have both the male flowers and the female flowers, right? So normally they have a good balance of male and female flower under very good weather condition if there's no stress, right? Now, when oil palm is under stress, number one, by weather condition, less insufficient moisture, so you have a moisture deficit, right? And number two, if you have a nutrient deficit, right, from 18 to 24 months ago, the impact will be here because 18 and 40 months ago, when they start the sex differentiation stage, they would, due to the stress, produce less female flower. Right? I think by nature they would think that, hey, I'm under attack, I'm under stress, I need to have less children, right? So I want to have less female flower. So as a consequence, you will find that 18 to 14 months after the moisture deficit or nutrient deficit, your crop will drop significantly.
Wow, I see. Okay, that's a chunk of information right there about the CPO harvesting and growth kind of cycle.
I think labor is also an issue. I think weather's an issue. So you can only see a couple of months out, really, realistically. You can see how the oil palm fruit is setting. I mean, just to support Mr. Lim's looking a long way out, right? But he's right. If you didn't fertilize, if you didn't fertilize 2 years ago,
no, he's asking whether in the short term, how are you going to boost your CPO production? What I'm saying is that there is no way because the stage has been set.
Throw more workers at it, maybe better harvesting.
Yeah. Based on the current situation, I suppose. So, but then again, where to find the workers? Right? In Peninsular Malaysia, it's very difficult. I have a small estate in Johor, right? In spite of paying a very high price for harvesting, I'm never, I'm not doing about close to 27 days harvesting ground. The harvesting interval is about 27 days. At that sort of harvesting interval, I think you'll be losing about 10 to 15% of your crop easily, right? Because the bunches get rotten, right? It's over-ripened. So when it's over-ripened and you harvest, a lot of the loose fruits will splash around the fronds, and generally your harvester will be reluctant to collect the loose fruit because they are paid by the tonnage, not by how the loose fruit is difficult to pick. Right? So you find that a lot of loose fruit will be left in the field.
Okay, thanks, Mr. Lim. I think that is very insightful on your business operations. I'm just checking out some of the audience's questions here. There is a lot which are asking about basically your hedging, right? So for instance, Stephen and Orange just now is asking, is there any hedging policy, CPO hedging policy in INNO price?
Askari, maybe because I'm not on the board and management of the INNO price, right?
Yeah.
I think
the CEO is also TSH, and he works very closely with Wilmer, so I think he's got a good understanding of where the prices are going, right? That's more a trading idea, but so far we've got a hedging committee to make sure that there's oversight. But so far, his advice to the committee is that not to hedge. So he's been holding off, which is, in this case, he's been proven right. So
I see.
At the moment, we're not hedging. We're not hedging forward. But I don't know about today. Today's price is crazy. He might have been tempted, but it's only for this month, right? And we get the MPLD price anyway, right?
Okay.
So at the moment, the answer is we are not hedging.
Yeah. So I think you mentioned something very interesting there, right, Mr. Asghari? Because through your relation, or rather through Enterprise relation with TSH, which again have got good relation with Wilmar, so you all will have a very good sort of like gauge on how the future CPO would look like. Am I right to say that? You would actually tap on their sort of like expertise as well.
I mean, I think Mr. Lim is been better. He's better at been managing that relationship. But I think William, also the CEO, yeah, he's a career industry man, right? He's had that relationship, and he's been in the oil palm industry. He lives in Tawau. Been there 35 years. He works with Wilmar, and we sell it to the Wilmar refinery, right? So he works with those guys. So I think he's got a good sense of where the market's going, and he's got, it's been a long-term trader.
Mr. William Tan has been commodity trading, right, for what? Since I know him back in 1987, I think, right?
Yeah. Okay.
He's a very careful, very kiasu guy.
Yeah. Very careful.
Very careful, very kiasu guy. I can assure you.
Okay. There is a question here from Shalista, and I think this could bode well from trying to understand your strategy as well, because from what we know, there are an influx of analysts who recently have really revised their CPO outlook for 2022. If I'm not mistaken, I was just reading one of the bank, if I'm not mistaken, it's Public, or was it RHB? They were talking about how this year the average CPO price could be somewhere around 4,008. Correct me if I'm wrong, but as a matter of fact, we can actually hedge all the way to December, and I'm not too sure about what is the December future price over here right now today. But if, let's say, assuming Enterprise or any other plantation company would actually go into hedging all their productions all the way until December, then what Shalista is saying here, where the analysts are being a little bit too pessimistic, is that the right way of looking at it?
Okay, I think if you look at the December price now, December is 5,002, right? April is 6,007, right? So theoretically, right, you hedge everything. I think now you probably be averaging about close to 5,700, right? Now, the thing is, you dare to hedge everything, right? Don't forget, commodity is so unpredictable, right? If you look at 2021, right, when even by September, I think middle of the year, middle of 2021, by September, the analysts are still talking about the CPO price averaging about 3,002, some 3,005, right, for 2021, right? And they are saying that for 2022, it will be about, or it will drop to about what, 3,002, right? Now, if you dare to hedge, of course, you will get 5,007 on average, right? But the thing is, if the price goes up, you'll be faced with a huge margin call situation.
This is the fair value of derivative accounting standard, right?
Yes.
Okay, understand.
Yeah.
Okay, Terence, maybe just one last question.
I think, Rondi, if you've got lots of debt, I think
Yeah.
the companies with lots of big debt, the bankers put them under pressure to sell forward to get the certainty.
Uh-huh.
But I think, price is no debt,
Okay.
so no pressure.
Yeah. Terence, maybe just one last question, then
Yeah,
I'll
go
pass
ahead.
it on to you. But I think, we are, since we just saw your Q4 result, which congratulations, it's a good result, right? But I think a lot of people are wondering, what was the average CPO price for Q4 2021, and rather also like what's the average CPO price in terms of your selling price for say 2021 for the entire financial year. Do you have that figure, Mr. Asghari?
Let me try and pull it up. Just give me a sec.
Yeah.
I think Fred got some figures.
I mean, I think for the quarter, the average selling price was 5,000.
Yeah.
Q4.
Our average price for the year was 4,004.
Okay. Got it. Okay, Terence, over to you.
Yeah, all right, thanks. Great performance so far. And knowing that current prices are way above, I think it's pretty optimistic looking forward as well. Maybe I want to ask a little bit about the operational stuff. As you can see, um, from the previous quarter to the current quarter, there was a question from the audience talking about that the production was relatively flat. About, if I'm not mistaken, it's about 66,000 tons of FFB in the quarter. So knowing that in this Q1 of 2022, it has been raining rather frequently as well. Do you see your production being impacted? And how do you improve the production in this year and going forward?
Last year, I think the final total rainfall for our area last year was 3,200 mm of rain. I think the average has been about 2,007, so it's a lot of rain, 15% more than the last 4-5 years average. So rain was a cause for, I think, for the slightly low output in the last quarter, and it's been raining very heavily too. I think what you've got to look at is how are things looking for the second quarter. I think we're always concerned about with management is this is a low quarter anyway, right, Mr. Lim? The first quarter is always like the lowest quarter of the year.
First quarter would be
So you can't really. It's also seasonal, so it's a seasonal crop. But last quarter was a bit of a disappointment, but that's mainly due to very heavy rain. So if you look at the rain stats, 15% more rain over the year is a lot. Oil palm only needs about 2,000 mm, 2,400 mm, and we got 3,003. So
Wow.
it's a lot of rain. I think it's like
Yeah.
250 rainy days out of 360 last year on the estate.
So typically when it's raining, does that mean like it becomes difficult to harvest, or does the palm itself produce less fruits overall?
generally you would have loss of harvesting days, right? When it rains, the worker will not go out to harvest, right? So that would delay your harvesting. That would increase your harvesting interval, right? And also, you would have the problem of evacuating the FFB harvested from the field to the palm oil mill, because as you know, the estate roads are not sealed. You don't have a tarmac road, right? It's all some mud, gravel, right? And where your terrain is hilly, you would have more problem with your road. So as a result, when it rains, you would get less harvesting days. So that's why your crop get less, right? And as I said before, once your harvesting interval is stretched, you would lose, you will lose crop. But I think year on year, the first quarter we should do better, isn't it? Enterprise should do better than
much better.
2021, right? Because 2021, the first quarter was also bad because of the 21-night drought, right?
Oh. So last year there was not enough rain in the first quarter?
Yeah. No, from 24 years, from 18 to 24 months ago, right? That affect your quarter one, right? And when come to the last quarter, you got too much rain also. I think throughout the year was quite heavier rain.
Okay.
I think quarter on quarter, compared to the third quarter, I think maybe we are not that far off also, in the for the first quarter, because last year the quarter four was no good.
Not far off better or not far off worse than quarter four?
I think could be slightly better. Sorry, what do you think?
So I'm just trying to pull up some of these numbers, okay, rather than guessing at it. I'm just like getting a bit nervous.
Because last year, generally the whole industry, Malaysia and even Indonesia, right? The last quarter, all were suffering. Everyone was suffering from the heavy rain. There was a lot of area in Indonesia that was flooded, right? Especially you are talking about those flat or pit area near, a lot of them were underwater for quite a long period of time. So last year the Q4 was a bad year, bad quarter for everybody in terms of FFB production.
Does INNO Price's plantations also experience flooding?
We have the different problem. No. Ours is a bit more hilly.
Oh.
So when you have rain, right, as I explained earlier, your evacuation is a problem. Right? Taking the crop from the field to the mill, right? And if it rained for too many days, right, and the road is damaged, you might not even be able to enter the area to harvest, right, until you have repaired the road. And if it continues to rain, raining, you have been a contractor before, that water is the worst enemy of road, isn't it?
Yeah.
And you can't repair the road when it's raining because it's no point, right?
Yeah, most of the roads are still using the earth roads in the estates.
Yeah.
So yeah, normally I guess when it's heavy rain, the soil gets washed off and the road becomes slippery. It's not safe for the harvesters to go and collect the fruits.
Yeah.
Okay. Sorry.
Yes?
Terence, you want to go ahead?
Yeah, actually, there's one question which I think is quite interesting from CK Liu. He actually asked whether the CPO that has been harvested, is it all sold to the TSH Wilmar? And, is it like a ready buyer, meaning that whatever you can harvest and whatever you can produce, the CPO, do they take all? And, do you have sort of like an agreement 1 month or something like that, or is it more on the spot price?
Mr. Lin, I'll let you have a go at that.
Okay. there is no agreement that they will take everything from us, but there is like a unwritten understanding that whatever we have. In fact, as you know, right, refineries are mainly working under capacity, so there's no reason why they don't want to buy our oil, right? Now, normally what we do is, say, at the beginning of this month, right, or at the end of last month, right, we would declare we would inform Wilmar, we expect to produce X thousand ton of CPO, right, and we will deliver to you, and in return, right, we get the average price, MPOP average price for that month. So that way, we don't speculate, right? We don't speculate on the daily up and down. So we take the average, but because of our relationship with Wilmar, also we get a slightly better price than other producer. That is a small little bonus.
So your scope is that you will harvest the FFB and process it into CPO and then deliver it to the Wilmar refinery.
Yes, yeah. And they pay us within 7 days.
Oh, wow, very good turnaround payment.
Yeah. If you look at our balance sheet, the trade debtors is very low, right? So your conversion from sales to cash profit is very short,
Yeah, amazing.
I think at the end of the year, our trade debtors was what, 2-3 million.
Unheard of.
Yeah. So great. What do you call the turnaround from the cash? What do you call it? The sales to cash.
Yeah.
Okay. So Mr. Lim and Mr. Asghari, yeah. So what I gather now is so far in Q1, the production should be better than Q4. Q4, Mr. Asghari, just now you mentioned the average selling price.
No. Did I say no? Q1 is a low quarter.
Low quarter. But it should improve from Q4 of last year.
No,
slightly.
I think we have a difference of opinion. So.
Okay. I mean, it's
what
typically.
Was the last quarter production?
But okay, regardless,
I gotta be a little bit careful about what I say. So I mean, it was there, right?
I think it's about 50 units. The last quarter was very bad.
Production.
Yeah, FFB.
66,000.
For last quarter.
Last quarter.
Is it?
Yeah.
Oh, then I'm wrong. Then it should be lower.
Okay. But in terms of average selling price, of course, you mentioned last quarter was averagely around 5,000. And of course, this quarter so far, I mean, it's we are already in March, and the lowest we have seen is about 4,008. So I think Goldie here is asking, he wants to understand more about your earning sensitivity to CPO price for INNO price, right? Like how much profit before tax for every, say, 100 ringgit increment in CPO movement? Would you have that figure?
I think it depends on where the production ends up. You mean versus budget, and depends on, because that affects our cost. So I'm not trying to be evasive. I'm just trying to say that, depends on your cost of production for the year, right? I mean, what are our cash costs for Kin? Maybe 1,008, 1,005.
No, cash cost will be less than that. Yeah.
So you
because
over the year.
Yeah.
On our budgeted production, whether we achieve our budgeted production or not, we would expect our cash cost to be around 1,005, I'd say, right?
Yeah.
I got to be very careful here about what I say. because it
Sorry,
depends,
yeah.
depends
Freddie
on
is asking to be let in.
no, because now there's the windfall tax.
Yeah.
Once it hits a certain level, so that increases your cost. Then there's a lot of new government taxes as well. The fertilizer cost is going up as well. So,
Freddie, you're muted.
Freddie,
Hi.
you might want to have a crack at this.
I think just based on historical numbers, currently their production cost is easily around 1,008. So therefore, like what Mr. Askari say, if the price maintained here with all these windfall tax, right, probably the improvement in terms of their production cost is maybe about 100 only. Because we also have to take into consideration the growth in their FFB production year on year, with it being prime. So maybe just to answer your question in terms of every 100, we are looking maybe around 3 to 4 million for every 100 per ton.
Okay, thank you, Freddie. So, Freddie, just now, in terms of INNO's cost per metric ton, you mentioned is about 1,008 to 1,009. Do you mind helping us in terms of the breakdown? I understand that Sabah has some sort of sales tax, right, and maybe some excess profit tax as well.
Perhaps maybe I'll let
Um,
Mr. Lim answer this one. Yeah.
Sorry, may I answer the first question about the sales tax? Sales tax is whatever sales price we declare is net of the Sabah sales tax, which is 7.5%. So like the last quarter, the 5,000 is net of the sales tax.
5,000.
But you are right, but if the market price go up by 100 ringgit, in the case of Sabah, you would have to pay 7.5%, right, to the Sabah government in terms of sales tax.
We've got a small royalty we've got to pay too.
Yeah. The royalty to the
to the forestry department.
Additional windfall tax.
Additional windfall tax.
So maybe.
So I mean,
I
trying
think it
to
would be less. Maybe 2 million. Fred. If we take all this into consideration.
Yeah, thereabouts.
Okay.
Okay, that's very clear. Terence?
Yeah. Actually, Mr. Asghari, you mentioned just now that the prices of fertilizer has been going up, and that's an interesting thing. Actually, how much? What should I say is how big a chunk does fertilizer account for in, say, your costs?
I think it will be about 15 to 20% or less. No, because if you include amortization, the cash cost, in terms of cash cost, maybe about 25%, right? But in terms of overall cost, because we have amortization, right? We also include our cost, the royalty pay to the forestry department, and windfall tax is also included as a cost. So I think overall, if you include all these things, would be probably what, 10 to 15%.
Yeah, I think. Yeah, I think. So I'm just having a quick look at the breakdown. They don't actually break down the fertilizer cost, but I mean, I was kind of trying to drill down to it. I think it's a bit higher this year, Fokin, because of I think fertilizer costs are up, what, 50-60%?
Yeah.
So I think it's, on a cash basis, more like 30% now.
Yeah.
Of cost, not of production, not of revenue, but of cost, right?
Yeah. Okay. For these fertilizers, so do you import them from other countries, or is it produced locally?
Sorry, I don't get you.
I mean, for the fertilizers, are they produced in Malaysia, or are they, did you buy them from other countries and import from Malaysia?
Okay, yeah. I think in Malaysia you would only have ammonia, right? Which is an end component. But generally, we do not use the ammonia nitrate. We would use an ammonia sulfate, which is produced in other countries. And of course, the muriate of potash, right? Is mainly the biggest producer is actually Canada, right? And Russia is also a big producer of potash, right? Potash is actually from the mine, right? So that would be imported, and the other one is a phosphate. Phosphate also will be imported. If it's rock phosphate, you will be buying a lot. Some of it will be from like Christmas Island, right? They have rock phosphate. Tunisia, you have the better grade rock phosphate, So those will be imported. I think generally all fertilizer are imported.
I think INNO is in with TSH in the buying syndicate, right? Fukin?
Yeah.
Yeah. So you get a couple of buyers together, and then you see what your requirement is, and then you put it out to tender, and then you just get the best prices.
Yeah.
So at least you got more buying power, instead of just
we combine our buying.
We can combine the buying, so you get better prices.
Yeah.
All right. And one last question about this. Do you encounter, for example, difficulties in securing enough fertilizer? Considering the talks of everybody right now, right? There's a freight shortage and all that logistics problem. So do you encounter this problem with importing of fertilizers also?
I think so far, because of our long established relationship, right, especially with some of the major fertilizer suppliers like Hedging, right? Over the last 20 years, we would generally want to make sure that Hedging got a slice of our FFB, our fertilizer requirement. The other one that we do quite a lot is also the Agromate, right? They are also one of the biggest. So because of this long established relationship, right? At the moment we are not facing any serious difficulty. I think logistically there might be some delay, right? Because we all know, right? There will be some delay, but nothing serious. Anything reported to you? So far, nobody reported to me about logistics, long delay in supply. Askari?
No, I think it's fine. I think so far, Fukin, and we can pay up, right? I think the issue is for the smallholders who they don't have the buying power and they're paying higher prices, right? I think some of the smallholders are facing problems getting fertilizer.
Yeah.
Still not a problem. I mean, high prices, you just pay, right?
Yeah. All right. Thank you so much for answering these questions. Rondi, do you want to ask the next few?
Yes. Okay, so Mr. Fukin and Mr. Asgari, I think recently there is an analyst, an investment bank which covers your stock, and I think the question is very similar to Mr. Liu's question here. In that particular report, it actually mentioned that one of the, I would say, the analyst was doing a SWOT analysis, right? And in the SWOT analysis, one of the weakness and the threat for INNO price, it mentioned something like, in terms of weakness, it says it has an unexciting long-term growth as there are no plans to acquire land. And also a threat of Sabah state may terminate or rescind agreement. And of course, that falls into Mr. Liu here, which actually asked the question: does INNO own the land or leasing, and what is the duration? Perhaps maybe you can touch on your shareholding structure and any plan to increase the plantation land bank, and also any plan to do M&A or merger with TSH, which is also another point into your shareholding structure.
Askari, maybe you answer the first part. I'll answer the last part.
You actually know a little bit more about the land and the leasing.
Okay, maybe I'll answer because I'm the one who started the planting. Back in 2007. I think it was a complete jungle at the time, and one night actually when I was coming back from one outlying estate back to the head office, on a narrow road, I was confronted by 10 elephants. So I just stopped the car. Fortunately, they decided to walk away. Otherwise I wouldn't be here to talk to you tonight. So that was when the initial planting. Now, yes, we don't own the land. That's right. We have signed an agreement with the Sabah state government with the consent of the CM, right, with the forestry department with a right to use the land for 66 years. Right? I think Fred already given you until I think what year was it? Right? But Sabah state government owned 50.1% of INNO price. So I don't think they're going to, as long as it's being well managed, they're getting good dividend, right? It's contributing to the state's Sabah sales tax. Is there any reason why they want to take back the land? And in fact, if they take back the land, I don't think it will happen, right?
I think.
Sorry,
go on.
Land size, I think the 12,600 hectares we planted with oil palms is all the land that is suitable for oil palms. The total area is about 23,000 hectares, right? So only 12,600 hectares are suitable for oil palms. So we select the area. We don't simply plant because number one, environment, right? Those area that is not suitable, we don't plant. Right? Some of the areas that are not suitable for oil palms, we are actually developing into this tree plantation. We are planting this laran. How many hectares? 6,000 hectares eventually we will plant, right, Askari?
The current plan is 4,000. We've planted 1,005 already. And we'll do about another 700-800 this year.
Yeah. I
know what you want. Once you get up to 6,
very bullish about this.
Yeah. So the idea is if you can, we get up to 6,000, we're looking for land to plant the laran, because if you can do 600 hectare a year, it's it's a tree plantation, so you can just harvest. It takes 10 years, so you can harvest 1/10 every year, and that actually will be that'll be a major contributor to profit, actually, if it works out as we projected.
But based on your current planting, right, and the growth of the trees, it looks very, very optimistic, isn't it? I mean, it looks very exciting.
It looks.
I think 2 years old tree are talking about what, 29? Some of them 29 cm diameter.
Yeah. It's a very fast-growing tree. I mean, others are looking at harvesting after 8 years. Our plan is to harvest after 10, and then you on a rotation, 10-year rotation.
Yeah. You may be able to do it. Yeah, I think 8 years maybe, because the harvesting size would be about 45 cm. Right?
I mean, I went to a conference recently, and the guy said it's very difficult to get 200 m³ per hectare, but we're very bullish. We're going to do a lot better than that. And the price per hectare for timber now is very high, and will be higher for sustainable timber, right? It's a timber plantation.
Yeah.
So that's actually looking pretty decent, I think.
And maybe the last question here: any plan for M&A or merger with TSH?
I'm not aware of
Okay.
any plan.
This is the most successful government, I think. Am I speaking out of turn? This would be the Sabah government's most successful
Joint venture.
GLC, joint venture. There is no way they're going to take the land back, okay? If anything.
So I think that bodes well. That bodes very well to our next question here, because I think Mr. Lim, you mentioned as long as paid a good dividend and all that, so everybody is happy. And I think me and Terence, we did a study. If I'm not mistaken, I believe INNO Price pays one of the highest dividend yield in the plantation sector. Correct me if I'm wrong, Terence. And I believe the direction in terms of dividend payout policy is also very clear. So Brian here is actually asking: is it actually possible for INNO Price to pay more than the 80% payout which Freddie mentioned earlier, or is there any possibility that it can pay below the 80% payout which Freddie mentioned earlier? Because I think Freddie mentioned last year INNO Price paid even 100%, right?
120%.
120%.
I didn't hear that wrongly, right?
Yeah, you didn't.
Okay.
I think even in the last quarter we paid 92%, right?
Yeah.
I think there was a 90% payout.
Yeah.
I mean, we have an unused credit line, so if we need any cash, we can use it. We can fund it. Our capex is provided for. I think we'll be paying a nice. I think at the moment I can't see it unless the prices collapse, right? As long as prices are high, we'll pay well over 90%, I suspect.
Okay, thank you. That is very clear.
We have enough cash for our requirements.
I think there's no reason because
the idea is to give the cash back to shareholders.
It's an agreed policy with the Sabah state government, right? It's a consent that we will pay at least 80%.
80%.
Right?
At least.
And depending on cash flow, right? If you look at our cash flow, you'll find that depreciation and amortization is about 22 million a year, right? So that is that is, I think, more than enough to cover your capex, right? So you can actually afford to pay more, right? So if you can afford to pay more, we'll pay more. I don't see any reason why we want to keep the cash, right? Askari is very against keeping cash in a company, right? So
yes, I think if there's cash to be paid out, it should be paid out to the shareholders.
Yeah,
not held in the
I
company.
agree with you.
Makes management lazy.
Yeah,
holding cash on the balance sheet.
Okay, thank you. Terence, over to you.
All right. Yes. Actually, there's another question from CK that is quite interesting, and he asks, you mentioned that INNO Price is already like all the palms are mostly in the prime and young prime kind of age. So he asks, when will it be the next time that Price would need to start their replanting process? And is there any synergy with other plantation companies based in Sabah?
I mean, typically you're replanting 20 to 25 years old.
Yep.
For kin. So it depends on the price. Now the price is high. So when price is high, even old palms, you'll just keep them.
Yeah, right.
when the price is low, even if it's a 20-year-old palm, you quickly use that as a time to start replanting, right? So if the first one is 2007, you're going to be replanting.
Yeah. It's still quite a long way off.
2028 earliest.
Earliest 2028, before the palms are considered quote unquote old.
And you start replanting a part of it, right?
2030 something.
2030, and then you'll start a replanting cycle over about 6 or 7 years.
Yeah. You are right. If the price is very good, you delay.
You just delay.
I'm harvesting some area that is 28 years old, 29 years old.
I think maybe I'll just help chip in a little bit. Currently, the average age is around 9.8. So just based on what Mr. Askari is saying, around 25 years. So I think we're looking at around 2030 and above, 2032 like that. Then yeah.
The oldest planting is about 14 years old, right? 15 years old. That is very small area. I think it's about 900 hectares, right? 207 planting, right?
That's right. Then in 2008, another 900.
Yeah.
So
because
all
when
in
you
all,
start, you don't want to start too big, too fast. You don't be too ambitious when you are still young, or when you're still a baby.
Yeah.
Young, you must be ambitious. Young, you must be ambitious, but not when you're a toddler.
Yeah, and I think this answers the questions from TKT as well, where he or she asked about what's the average age of the palm currently for Price, and maybe you can explain a little bit what is considered prime age for a palm tree.
Prime age, I think probably year 9 to 8, year 9 to year 18, 19 like that, right? Should be your prime.
Yep. Okay. All right.
I think there's a common question here. People are wondering about your deferred tax. 77 million. What does this mean?
The deferred tax is we have not been paying tax, right? We have been deferring our tax because there were a lot of capital allowances, plantation allowances, right? The incur when you are developing the estate. As plantation is like that. The first few years you don't make money. Typically, the first 4 years is you'll be losing money. So you will start making money year 5, year 6, and so on all the way. Right? So all those capex that you incur, right? You only start offsetting against your profit after year 5, year 6, and so on. Right? So we have not fully utilized our accumulated capex, capital allowances, and also tax losses from the past. So all those brought forward losses and capital allowances. So for accounting purpose, right, you still charge the standard 24%, right? So you put it as a deferred tax.
Okay, Mr. Lim and Mr. Asgari, I think there is a common question here with regards to ASP normalization and how plantation stock can be very similar to glove stock going forward. I think I can't find the question, but it asks, will what happened to glove stocks happen to plantation stocks when ASP normalize? What would your response be for that?
I think I'll go first, but I think Fukin's opinion is much more valuable since he's got much deeper industry experience. But I'm like a fund manager, right? So I think you got to look at what's a sustainable selling price. There's a lot of cost pressure in the industry. Edible oil market grows at about 2% a year. So that's about 3 to 5 million tons a year. Palm oil has been the guy who's been adding the most. It's about 30% of global production, exports, right? Global export market. So I think prices will be reasonably firm. So I think you as an investor need to decide what's the sensible kind of long-term average. I don't think it's going to go back to 2000. Probably be 3,005 to 4,000. I think in the long term, there's a lot of cost pressure too on the industry, but that's long term. If you look at the recent analysts' reports, they're saying that it'll be 4,005 at least for 2-3 years, because there's a big replanting cycle going on in oil palm. You've got to make a judgment about that. I don't think the 7,000 is sustainable for many years. I think it'll come back, but is 5,000 sustainable for this year? Maybe. Is 4,005 sustainable for a couple of years? Maybe. So, Fukin, what do you think?
Yeah, I think price level is very difficult to forecast.
Sorry, can I make one last comment?
Okay.
Increasingly, the price is really heavily influenced by government policy. Indonesia has an oil mandate. Recently, prices affected because the Indonesian government has this domestic market obligation. They want to make sure that there's enough oil palm for cooking oil in Indonesia. So they mandated it that it must be sold into the local market at a low price. So that took out a big chunk of supply as well. Indonesia has mandated biofuel prices. India, to try and control the price of oil palm and the demand and the effect on its current account, keeps increasing and decreasing the import price of oil palm. So increasingly, there's a lot of government influence on the price of oil palm. So I'm trying to keep myself up to date with it, but I'm not an oil palm trader. But I think you've got to watch all these things as well, apart from weather, right?
I think Askari covered very much the answer, but we should look at the long-term supply, right, and consumption. I think consumption, right, is quite steady, right? You can expect, every year about 5 million plus increase in consumption of edible oil, right, and also other chemicals together. Now, then the critical thing is supply, right? Okay, you look at edible oil supply. Where has, over the last 10 years or so, right, where has all the additional supply been coming from? Malaysia, we know our peak is over. We used to produce up to 22, 23 million a year. Now, last year we are down to about 18. All right. This year, maybe, hopefully, a bit higher. All right. So, in the past, palm oil supply has been coming virtually all from Indonesia. But something happened in 2012. Number one, I think around the time, the government declared a moratorium on felling of forest land for planting of oil palms. So there was a moratorium. All right. Number two, RSPO. All right. Now, when it started, it was not too bad, RSPO. All right. To me, RSPO is the major factor that would be restricting future supply of CPO, because under the RSPO compliance, one of the things is no peat, which is good, right? No planting in HCV, the high conservation value area, right? So like things like river Rhine area where you have the protected species like elephant, the orangutan, hornbill, all these things, you don't disturb, you don't plant. All right. Now, that was okay. Until recently, they introduced an additional stopper, high carbon stop area. Right? And to them, even previously fell jungle, where there has been a regrowth into macaranga, right, which is a useless tree. Askari, you know, right? They also classify as high carbon stock, right? And for all this area, if you're a RSPO member, you want to start new planting, right? You have to follow the RSPO procedure called NPP, new planting procedures, and they will send a team of people to consultants and so on to look at your area to check, right, whether it's peat, whether it's high conservation or high carbon stock. Now, once you get this thing, right, these three category, you cannot proceed to plant. And as you know, most of the land you would, unless it's been recently fell before, and if it's recently fell before, it will tell you, hey, why was it fell, right? So very difficult to plant now, and that's one reason why I think you know that KLK buy IJM, right, plantations, and Tan Sri Leo Ohen also say, because it's almost practicable to have organic growth anymore under the RSPO policies. That's why they're forced to buy IJM, even though they say they are, at the time of negotiation, they are paying above market price. So that's why from 2012 until now and going forward, I think very, very little new oil palm estate will be planted. So that is a big constraint on future CPO supply when your demand is still increasing, right, every year. The other thing is climate change. As you know, with the climate change, weather extremity is getting to get more severe and more frequently. Right? If you look at California, I think 10 years ago, maybe once in a while you heard about wildfire in California. Like now, fire is about every year, right? Now you look at the supply of soybean oil. a lot of the supply of soybean oil actually is from Argentina and Brazil, right? And most of the areas planted recently with the soybean are through illegal felling of this Amazon forest. So people are really getting very worried. And in fact, recently, I think Greenpeace Brazil is also petitioning the shareholders of some of the supermarket chains to do traceability of the soybean oil they use. So eventually, I think sustainability for soybean will also come in, just like the RSPO. Right? But meanwhile, I think probably there will be less illegal felling of Amazon forest.
Yeah, thank you guys for that. I think our audience also chip in a little bit. Mr. Liu here mentioned, I mean, the question was from Shiba, right? What will happen to glove stocks happen to plantation stocks? And on top of your both of your answers, Mr. Liu here mentioned, you can build glove factory in 6 to 12 months, but you need 9 years to get prime palm oil plantation, which I think is a very good answer.
It's a very good answer, yes.
Yeah, to build glove factory is fast, but to build plantation, gestation years is at least 10 years.
Yeah.
Actually, it's now almost impossible.
And very capital intensive.
Yeah.
The plantation is you invest a huge amount of money upfront, right? And once you develop already, then it becomes a cash cow for the next 18 to 20 years.
Yeah. Terence, do you have any other questions? I think we
actually,
almost
I just wanted to comment that as Mr. Lim mentioned earlier, right? It's not just about the money, but because of all this RSPO and sustainable kind of planting going on. Sometimes even if you have money, you can't really get the approvals to sort of expand and plant more also.
Yeah, you just look at KLK, how much money they have, and you look at KLK, how much of planting they did over the last 10 years. Maybe they managed to plant 2,000 hectares a year. That's about it,
Okay.
So it's not that easy to increase supply, Yeah. Rondi?
I think you can increase supply by getting better planting material, but again, that's a 9-year project, right? That's a that's UP were they announced their results as well. I was just having a look today, and they're talking about getting 23% OER, so much higher production, 7 tons per hectare, but it's taking years, right? Then you got to replant all your estate.
Yeah.
That's where supply is going to come, but it's going to take 20 years, lah.
Yeah.
Very slow.
Remember Lim Keng 35-25?
Pardon?
The late Tan Sri Lim Keng when he was Minister of Primary Industry, his aim was his vision was 35-25. 35 tons of the FFB
per hectare.
at 25% OER.
So 8.5 tons per hectare.
Yeah.
I think it's now 18 and 20, right? I think it's about 3 point. The average in Malaysia is 3.8 tons per hectare. So you can double it with better planting material. That's a 20-year project.
Okay, I have 2 last questions before I pass the floor back to Terence. So the first question is with regards to ESG and foreign shareholding. I think Goldie mentioned, and we because we also see fund flows on a weekly basis, right? And we realize there has been an influx of foreign funds actually buying into plantation stocks. I'm not sure what is the current institutional as well as foreign funds holding in INNO price. If you have the data, please, maybe you can share with us. And I suppose this is touching into the ESG matter, when basically Given is asking, what are your opinions on ESG concern to CPO planters in this side of the world?
I got to say, I don't check the shareholders list that often, but we're below $1 billion, so I don't think you get the big institutions interested in us yet. That's one thing. We're just too small, so we're not seeing that. Certainly, the foreign institutional interest. I think the new rules for the big funds too, the engagement rules with oil palm companies, is you've either got to exclude them altogether, or if you want to include them in your portfolio, you've got to have engagement. You've got to call us up, and then you've got to make sure that we're all ESG compliant, and then you can buy into the company. And I think a lot of them think it's too much work, especially for a small fund like us. So you're not seeing very much foreign interest yet. I think if we get well over $1 billion, maybe there'll be some interest. But you know better.
So far as I know, there is no foreign fund. There is a few shareholders under foreign name, but I suspect they are
Individuals.
It's just custodian holding for local people.
Foreign nominees, okay.
Yeah. So I don't think there's any foreign shareholders.
Yeah.
The comment on ESG, because if you think that CPO, the industry has been under RSPO for almost 10 years now, 10, 12 years, right? 14 years. So it's ESG has been a big concern for the whole industry. So I'm really intrigued to see that everyone still thinks that it's an ESG problem, when the industry has been very focused on it for 14 years, right? To the point where you can't expand anymore because of ESG. And what has happened is, because of these ESG concerns, foreigners have sold down the whole plantation sector. I think the foreign shareholding used to be high 20s, 25, 26%. It's down to 11. So it'll be interesting to see if they come back. That has been the problem with ESG in the oil palm industry, I think. It'd be interesting to see if they come back over time.
Okay. Terence, maybe one or two last questions?
Yeah, actually, there's a question, a few questions asking about the labor. Number one, is INNO price also affected by the labor shortage, experienced by many industries in Malaysia? And Judy here also asks, how is INNO prices sort of approach to managing, this kind of labor issues?
Okay, you want to have a go first, or?
I think labor shortage. Everybody is facing labor shortage. Right? It's a matter of degree. Right? In fact, labor shortage has been with the industry since as far as I know, since 1978, when I first joined the industry. Right? Now the situation at the moment is obviously more serious than years ago, right? With the pandemic, right, border closure, of course, is worse. But fortunately, I think Sabah is better off than Peninsula, right? Because Sabah is much more nearer to the source of labor, right? So yes, our plantation is facing a shortage now, especially for harvester. So generally, we would say that in an ideal situation, one harvester would take care of about 15 hectares of oil palm for harvesting. Right now, we are probably about 18 to 20 hectares for one harvester. That's why the round is delayed. Now, how do we resolve this problem? Okay, one of the ways, of course, you pay a higher piece rate. So to encourage them to turn up every day, right? The Indonesian workers are actually very diligent. They are here because they want to earn more money. So if they can earn more, they are prepared to work harder. They are prepared to work every day, right? Sometimes even Sunday they want to go to work, right? Now that's one thing. The other thing is once your harvesting round exceed 18 days, you employ their wives, to collect the loose fruit as a separate operation. So the husband will go and chop down the bunches, right? The wife will go and collect the loose fruit. Then the loose fruit will put in a separate bag and we pay them separately to the wife. So that way, the harvesting efficiency will be improved because they don't have to collect the loose fruit. So the able-bodied man, right, will chop down the bunches, right, and the ladies would pick up the loose fruit. That is our way to improve productivity and so less dependent on just the man alone. Askari?
I think the other thing we're working on is just improving the living conditions. So spend more money on really decent housing. We've got schools where we've got the Indonesian government send the teachers for the children there. We help them send their senior kids, their older kids to town to be educated for high school because they're mainly Indonesian workers. I think you've got to make a much more serious effort to improve living conditions.
Yeah.
So we've been investing money in that.
It's also part of CSR and the social responsibility.
I think there's also a big push by NPOB2 probably in the last 2 years, right, about mechanization, right, Fukin? And now I mean I've been talking to management about getting all these crawlers and mechanized trolleys, right? William has resisted for many years, but I think he's caved in now. And I think if you get all of that in, you can probably you might be able to reduce your labor requirement by 20% over a couple of years, 2-3 years. I think there's a big movement to improving mechanization in the industry too.
I agree with you, especially when your land area is, I think the flatter areas you can implement, but some of the areas in INNO there, I think it's not practical.
Too hilly.
Yeah. Okay.
All right. Okay, thank you so much for addressing that concern on everybody's mind. It's great to know that INNO, focuses a lot on the CSR aspect as well, and I think that's good in the retention of the harvesters which are in short supply. Because like for the harvesters, you kind of need the really strong and fit men to carry those long poles. It's not just anybody who can do it. I think for me, there's nothing else. Rondi, is there anything else that you would like to address?
No, there is nothing else for me as well. Maybe just one last question, which I feel maybe Freddie can address. Let me see where it is. 1 second. It's about EV per hectare. Freddie. I'm not sure if you have the number, but let me see. Yeah. But Mr. Liu again is asking, what is the value of INNO based on plantation land EV per hectare?
So I think, let me calculate. Right? So I think the EV is around 967 minus 34 is around 933. So we are looking at around 70 to 75,000 per hectare.
Okay. All right. I think with that we can wrap things up. There are some questions coming in which actually have been addressed earlier on. So, for instance, Mr. Joey, I think the management had addressed about the hedging policy, and Dato' Leong, I think the management had also addressed about the dividend payout policy. So, if you can just rewatch, that would be good. Mr. Asgari or Mr. Lim, perhaps any last words before we wrap up tonight's session? Thank you so much for spending close to 2 hours with us tonight. Yeah.
No, thank you for giving us a chance to answer your questions. Happy to do it.
Thank Stockbit and also Fred.
Thank you very much, guys.
The effort. Yeah. Thank you.
Yeah.
Cover us. Yep.
Okay, thank you, Mr. Lim. Thank you,
thanks, Freddie.
Thank you, Freddie. Guys, if you guys would like to continue the discussion in Stockbit, you guys can just go to stockbit.com or download our app. The presentation slide will also be provided over there. Thank you, and I think, Terence, we can end the broadcast. Mr. Lim and Mr. Azjari, maybe stay back for a little while. Yeah, thank you.
All right. Thank you so much, everybody, for tuning in tonight. Have a good night. Stay safe, and we'll see you all at the next session. Good night.
Thank you. Good night.